Looks like we're ending off the year, the last day of trading of 2022 on a very rocky note. It's about 1:30 p.m. right now on the East Coast, and let me actually make my face a little bit smaller, guys. There we go. And all of the indexes right now are in the red. The Russell's down 0.95%, which is actually the least red one out of the bunch, which usually isn't the case, but today the Russell is the least red, as the Nasdaq's down 1.25%, the S&P's down 1%, and we have the Dow Jones almost down 1%. And of course, in this video, we're not just going to break down the stock market. We're going to break down Tesla stock. We're going to do an update there and go over some other stocks that I'm looking at. So sit back, relax, take a sip of your water, stay hydrated as always, guys, and let's dive into the last video. Well, not the last video of the year, but it's the last day of trading. So it's, one of the last trading day videos of the year, if you will. So let's just dive into it. And if you guys remember yesterday, the markets did very well. SPY went from it was, in the pre-market at about 377 at its worst, I believe. And intraday got all the way to almost $385. It ran up almost 2% in that span of time. And Triple Q in that same time period, let me pull that up. Triple Q, which tracks the NASDAQ 100, this in the pre-market was at about 260, 261, and it ran all the way to almost 267.50, which is almost a 2.5% move. That is a pretty big move there for Triple Q. And guess what? Pretty much all of those gains, especially on SPY. Triple Q, some of the gains are being held, but SPY's pretty much given back all those gains. We the intraday gains, at least, which we hit 380 right at open yesterday, and it ran all the way to 385, like I said, roughly. So yeah, look at us now. We're at 380. We pretty much gave back that entire gain. You guys are seeing that, right? And going back to Triple Q, it didn't give back the entire gain, but a good amount of it is pretty much lost. From the open. And a lot of the green came in the pre-market yesterday. A good amount did, but, a lot of the, gain that we saw in the intraday was just lost with today's pre-market selling and the selling throughout the day. So at this point, the markets are at a very vulnerable spot, like you guys know they have been. This is nothing new. We've been talking about this on the channel, which is why you have to subscribe. If you're one of the 50%, I think 60% of my audience here on this channel, on the other channel, a lot more are unsubscribed. Not unsubscribed, but they're not subscribed. On this channel, I think 40% of you guys are not subscribed. So if that's you, hit that subscribe button, because we've been talking about this. And on the other channel, I think 80% of you guys are not subscribed. So if you haven't subscribed to the Stas Talks Money YouTube channel, what are you doing? Use that link down below. Go to the YouTube search bar, type in Stas Talks Money. Make sure to subscribe to that channel as well, where we talk more about general finance, personal finance, not just the stock market, which is what this channel, Stas Talks Stocks, is all about. So, yeah, markets have been rough. We all know that at this point. Triple Q is about $6-7 off the lows right now. It's pretty much right there, those lows from the middle of October. And SPY is not too far off as well. Let's pull up that. The lows were right around 350. We're now at 379. We just cracked under 380. So, yeah, we're getting there. And the Head and Shoulders that we talked about a couple days ago, we outlined this, and, we called it out. It's playing out perfectly. Look at that. We're failing at the neckline. We've been failing at about 385, 390. That's pretty much out the window at this point. And if we end up falling under this point right here, 375, there's going to be a massive leg down. The right shoulder is going to complete, at least in my opinion, guys. And of course, I'd love to know your thoughts in the comments down below, as always. So let's do a quick update on Tesla stock. Then we'll go over some other ones that I'm looking at. So make sure you guys stick on throughout this video. It's not going to be a long video. We're only 4 minutes in. We're going to be about 10-11 minutes in on this one. So Tesla right now is pretty flat. It's at $121. One good thing about this, though, is Tesla is holding its gains from yesterday. If you guys saw yesterday, Tesla had a massive green day. It started off the day at about, where was it? Like low 110s. Yeah, about 111 is where it closed on Wednesday. Then it ran up all the way to about 124. So at one point it was up 8% yesterday. I think it closed up 8%, and it went up even more, just a little bit in the aftermarket hours. And today in the morning, which is really good for the bulls here, Tesla actually took the highs out from yesterday and the day before, obviously. And you can see now we're fighting to hold a higher lows in general here on, what is this, the 5-day chart? Yeah, so I'm kind of seeing a bit of, in the very, very short term here, an ascending triangle on Tesla. We have the higher lows here in the past 3 days of trading, but really in the past 2 days of trading, we failed at about $123 to $24. So right now we're at 121. We're fighting at that higher low. Let's see if we do get that pump, maybe into the close today. Who knows? Maybe obviously next week, that's possible too. But let's see what happens today in this little window right here. This is going to be quite interesting on Tesla, no doubt about it. So yeah, if 125 breaks, there could be a breakout coming on this stock. As you guys know, an ascending triangle, if this plays out like a textbook ascending triangle, this is what we could see. But obviously, if we pull back the layers a little bit, like I've been saying, guys, Tesla is still in a downtrend. So even if it breaks out on the 5-day chart, it's still in a downtrend. But what it means is on the 5-day, if it breaks out, the relief rally that we're seeing is going to continue. And it actually makes sense. I mean, don't you guys see we have quite a ways to go to the 180 SMA resistance, which is about $15 higher from where Tesla is right now? This makes sense. I mean, if the ascending triangle plays out, we get that final leg up, the final leg of the relief rally, if you will. It gets to 130, 135, and that's where we're probably going to get some selling pressure. That's where the downtrend will likely continue, in my humble opinion. So we'll see. It's rallied a good amount already off the lows. From 104 to 121, it's already up 15, 16%. Let's see if it continues. 125 needs to break. If it does, we could be going to that 135 level like I mentioned. So Tesla is not looking too bad. It's holding up pretty decent today in the midst of an overall red day, as the VIX is up as well, and the metals are selling off. Well, gold's actually flat, but silver's down about 1%. So it's a red day all across the board. VIX is up. I mean, it is not pretty today, guys. It is not pretty. And some other stocks that I'm looking at, one of them is Etsy, ticker symbol ETSY, which has just been destroyed lately. It's currently down 3.5% on the day, but over the past couple of weeks, it is down from 142 to here being about $118. So it is down 17%. It's pretty much almost in a bear market. 20% is a bear market. It's 17%, so almost there. And it's been rough. And if we pull back the layers a bit, the 4-hour chart doesn't look that bad. It doesn't look all too bad. It's pretty oversold. There's no doubt about it. We're right now right around the 180 SMA, which is at about $115, $20. Let's see if buyers maybe come in here. I'm not 100% banking on it, but if we do see a pop at 120, 118, 115, it would make sense considering a couple months ago, back in the middle of September, early October, we kind of peaked out at about 115, as you guys can see here. If I zoom in a little bit, you guys see that right here. So it would make sense if buyers came in there, but nothing's guaranteed, obviously. And we're going to have to wait and see how that ends up playing out. Lululemon is another one that I'm looking at, which is pretty flat on the day, right around $315 a share. And we're noticing here an uptrending channel. It's pretty much been in this uptrending channel for the last half of the year. I mean, the past 7 months actually. And if you guys take a look, Lululemon's been, crawling out of this hole that it's been in for close to, 8 months at this point. If you guys recall, back in the middle of April, this thing was at $410 and it went all the way down to $250 by the end of May. So in just a month and a half, this stock lost about 40%. That was just brutal. In just a month and a half, no joke. And it spent the last 6-7 months clawing its way out of the hole, and it's nowhere near out of the hole yet. Getting back to where it was back in April, where it was at $400. It's only at $310, guys. I mean, it's still very beaten down. And it's in the past couple of weeks, it's down from 390 to where it is now 315, down 17-18%. So let's see if buyers come in here on Lulu to maybe start pushing it back to that mid 300 mark. I think that could be possible here. AMC, guys, keeps on getting hit. Today it went down and it's currently down under $4 again. And just a couple of days ago, it was at 370. So each day that goes by, guys, AMC keeps getting closer to fair value, which God knows what that is. Probably under $2, under $1. Who knows? Maybe here. I mean, it depends on who you're talking to and what their assumptions are, right? GameStop, every day that goes by seems like it's getting closer. Earlier this week, I believe it hit under 17. Yup, now it's at about $18. Probably going to go under, going to continue to go down in my humble opinion. So those stocks are not looking good. And Disney keeps on getting nailed as well, which is one that I'm looking at closely heading into this new year, no doubt about it. Disney's down 1.7% today, back in the mid-80s, which, we're pretty much right at the lows here of the year. The lows on the year are where we are now, and if we pull up this max chart, and I've mentioned this before on the channel, but right now, the way things are, guys, the stock price is at pretty much, close to a decade low. I mean, we were at roughly where we are now in the very low 80s during the COVID crash. But the last time we were in the low 80s, look at this chart. I mean, the proof's in the pudding. Look at this chart. It was back in the end of 2013, end of 2014, or rather beginning of 2014. I mean, heading into, middle of 2014. So we're talking close to a decade ago is the last time Disney was at these levels. So if this stock really starts to break under 80 heading into this new year, I'm going to be buying Disney, more Disney. It's one of my holdings. I've held it for a long time. And at this point, I mean, it's down from 200 to, getting almost under $80. To me, it's a no-brainer buy under these levels for a very long-term hold. I'm not speculating on what's going to happen in a year or two. I'm just buying and forgetting about it, looking at it 15, 20 years down the line, right? So with that being said, guys, I'm going to wrap up the video. If you enjoyed the video, make sure to smash that like button, subscribe, and if you want some free stocks, get up to 20 stocks from Moomoo, each up to $2,000 using that link down below and depositing at least $100. And you could also get 12 stocks from Webull with any amount deposited. And if you want to check out my Patreon, all of those are in the description box. I will catch you in the next video, guys. Thanks for watching as always. Peace out.